Hey everyone, welcome to today's episode of Startup Talk. And today we're talking about how to get fundraising for your startup. Now, if you have big goals, you're typically also in need for a big bag of money, but big goals aren't enough to convince investors you're that 1 in 100 startup they should invest in. So today we're going to talk about what will convince them. So if you're ready to get your big idea funded, then today's episode is for you. We'll talk about what it means for your startup to raise capital from investors, what's pre-seed and a seed round and how to raise it, and what are accelerators good for and how to get in. And joining me today is Melinda Elmborg. She is Accelerator Co-Lead at Fast Track Malmö and founder of Startup Action. She has multiple years of experience both as part of a VC and as part of an accelerator, so she knows both sides of the table. So I'm very happy to have her here today on the show. Now, if you're new to the show, welcome. My name is Saskia and I help you be the extraordinary entrepreneur you're meant to be. And one way that I do this is by hosting Startup Talk. Every 2 weeks, I host a new guest and we'll cover a topic that will help you grow as an entrepreneur and startup or level up your business. And in the other weeks, I share tips and tricks to help you start your business as well. So if you want to turn your passion into a thriving business, make sure to subscribe to the Entrepreneur Suite. And share your thoughts in the comments. Let me know how you aim to raise your funds for your startup. Now, let's start the show. Hey everyone, today I am joined by Melinda Elmborg and she is here to talk about fundraising for early stage startups. So let's give a warm welcome to Melinda. Hey, welcome to the show.
Hi, Saskia. Thank you for having me. I must say, what a lovely color you have on your phone.
Yeah, so for the viewers who are new to the show, we always color coordinate, okay?
Yeah,
we have
exactly.
complete mailings, callings, WhatsApping about, hey, which color are you wearing? And is it the exact same color of yellow that I'm wearing today? So, so today we fully understood each other.
Yeah, exactly. So aligned.
So aligned today. That's really a show that this will be an amazing episode. So Melinda, tell me. First of all, it's great to have you on the show. I think fundraising, funding, it's always a big topic, especially if you want to achieve big goals and big dreams. So I'm so happy to have you on the show today. And so you're
thanks a lot for having me. Super happy to be here. And indeed, I think there's a lot of mystery around fundraising for startups, especially early stage startups. So I'm so happy to be here and answer any questions and demystify this a bit.
Well, I love that, especially when you're just getting started and you don't know all the details yet. How do you get funding? So let's dive right in. So you're an Accelerator Co-Lead at Fast Track Malmö and the founder of Startup Action. How did that came to be?
So it started a bunch of years ago when I started as part of the investment team at a VC firm in Paris. And I was responsible for the Nordic markets and trying to find an interesting startup for the VC fund to invest in. So they were investing in seed rounds. So I met a lot of early stage startups, which was super duper exciting. I mean, I learned so much during my time at Daphne. However, what I started to feel after a while was that when you're a VC investor, you meet a lot of startups, but you're also supposed to say no to a lot of startups. So 99% of everyone you meet, you're supposed to say no to.
Really? 99%? So you meet that many people as well, but that's a lot.
Yes, exactly. You're meeting so many founders and you say no to a lot of them. And after some time, I felt like this is not really what I want to do. I would love to actually be able to help more founders and not only the 1 out of 100 that you actually invest in. So that's how I decided to leave the VC fund, and I started first of all freelancing. I wasn't really sure, what it actually was supposed to be that I was supposed to do, to help founders. So I started working a lot with metrics because that was some experience I had from before, a bit more like freelancing. And then I also started working with incubators and accelerator, different ones, but as like a guest coach. And I started seeing other areas, not only metrics, of course, but also helping with, of course, fundraising, which was where I really had an edge because of my background, because I had been an investor. So I knew exactly like, this is what you need to say.
You knew exactly the spots to hit to know in order to convince them. Yeah, that makes sense.
Yeah, exactly. And also working a lot directly with founders. So that's how I started Startup Action, which I'm still running, but a bit on the side at the moment. And one of the accelerators I was working with and like coming in were a consultant was Fast Track Malmö. So they are a accelerator, but they were focused a bit more on quality, like small batches, and a lot of focus on startups that are really ambitious and then really have big visions and that want to like disrupt their industry, and therefore startups that can be interesting for VC funding. So I really aligned with that accelerator. So when they opened up a position for leading that accelerator, I jumped on board. So now I'm doing both, like mostly focus on Fast Track Malmö, but also doing Startup Action on the side.
Okay, wow, that sounds amazing. That sounds like such a great opportunity to be able to try to jump in on Fast Track Malmö.
Yeah, I'm so happy to like at Fast Track Malmö able to work much more in depth with the companies with the startups, with the founders that I meet, and also that we invest 50k euros in each of the startups that join. So we have like that is our skin in the game, so that we are interested in following them for a bit more long term and really being passionate there with them, and almost in some points a bit like a co-founder. It sounds cliche, but the people in the founders in the program, they say that them telling us like, wow, I feel like you're more of a co-founder than not really an investor.
Yeah, well, it's going the extra mile as an investor, if I hear that correctly.
Yeah, exactly. Yeah.
Amazing. So say, how do you get started? Say you say I'm a startup and I have a big dream. I want to change the world with a new type of robot that can, smell when you need anything, or just know immediately like, hey, Saskia is going to wake up. Let's get her a cup of coffee, and then does the whole household for me. So I want to bring that into the market, into the world. How do you start with something like that? Because I can imagine, especially with the more out there startups, which we're talking about, it's more fuzzy in the beginning, right?
Yeah. So it depends a lot, like how you can go ahead. It depends a lot on the team that you have, first of all. So what VCs and also angel investors that invest, what they usually want to look for is either a super exciting team, an impressive team. So typically that means that you've worked in a tech startup that has scaled and become super big, or you have like product with a very big vision, or you have metrics to prove already that I built something, it's working. Our team is probably good because we achieved these numbers. So any of those, yeah, exactly. So you need to have one of those three, and so you need to think about like which is where are you supposed to be strong, and if you have the number one or the number three, do you have the team or the metrics? Those are the easier ones because there's more proof. When it comes to the product, if you only want to raise based on like a really awesome product, it's really hard. It can happen, but you need to find people who, in the very, very early days, you don't have anything else than just a product idea. You need to find people who are super excited about what you're doing, and maybe who are in the same industry, or know that this is the direction that the market is going in, and can trust you to be able to realize this product
So
vision.
these people, would these typically be early customers, or would it be a board of advisors, or what kind of people would you be looking for?
So you want to look for angels to begin with. If you don't have like big experience from before, and if you don't already have like connections with VCs, you want to go for angels first. And the best is to try and find angels, business angels in your around you in your network, and like try to come to like accelerators or incubators. There you can usually find business angels and get in touch with business angels.
Okay,
So that would be the first step.
Okay, so help me out here a bit. What is a business angel, and what do they typically do?
Yeah, so a business angel is just a wealthy, typically quite wealthy individual. But you know, when you have some wealth, you need to manage that and invest that so it can grow. So either you can invest in real estate, or you can invest in the stock market or something else. And one of those things you can invest in is startups. So that's a business angel, someone who wants to take his or her own money and put it into startups. So in Europe, you have thousands and thousands of business angels, and some of them are doing that full time. Many of them are doing it part time. And usually they love to invest in either people that they know from before, or in an area or a market that they are really passionate about, that they really believe in. Or a market that they have experience in, where they can help with experience. So that's great with business angels. They usually want to come on board really early. They can almost be like on the limit between a co-founder and an investor. So that's why they're called angels. You know, they're sent from the sky. You know, to help you make it happen.
They're sent from above, there to help you.
Yeah, exactly. That's the idea. But they're not always easy to find, because they're not always super organized. It's all about like network and everything. There's no like website where you can go and like all the business angels are listed.
That's exactly that was going to be my next question. Like, where do you find these angels? I mean, is it just praying that they fall out of the sky? But it's not that you have typical network events or online groups or forums where they just hang out. You really have to tap into your own network and into the market industry.
Yeah. So my best recommendation is to look at startups that are a little bit similar to yours, of what you want to build or you want to do, and try to find investors that have invested in that startup that might be in the same market, not competitive, of course, but in the same market. Let's say you want to do a robot, then you can look at angels that have invested in robotics and other robotic startups. That way you can find really relevant angels.
Okay. Oh, I like that tip. Really looking at how does the not to say the competition do it, but the rest of the market do it. Who is active in there, and then tap into those people. So yeah. I can imagine a business angel, especially since they're there at the very early start. They like taking a risk, or they're less risk averse. But how do you convince such a person that you're the right startup for them? Or how do you know they're the right business angel for you?
True. Yeah. I mean, it goes both ways. Totally.
Yeah, absolutely, right?
So I think going back to these three pillars, that if you go, depending on what you go with, you have to show really strongly that you are very good in that area. The thing with business angels as well is that they are very, they're all unique, they are all their own people, so they can do whatever they want to do with their money. So it's not always, obvious, and there's no recipe of this is what you should say to all angels, and they will love you and they will invest. Unfortunately, but there are a very strong best practices, of course, of what typically works and what they typically want to hear. And you have angels that are more risk averse, and you have angels that are more looking for more risk. I think it's what's really important when you meet an angel is to ask okay, but what are you looking for? What do you like to see in a startup that you want to invest in? And try to fit that with with the vision that you have in mind. If they say like, yeah, I want to invest and I want to have 25% of the business, and then we do an exit we sell the company to someone in 3 years, and then I get 2 or 3 times my money. That's what I'm looking for ideally. But if you're a startup and you want to do 100x and you want to raise a lot of rounds and you want to be the next Uber or something, then that's not a good fit. Then you don't want the same things. So that's why it's really, really important to always ask questions to the investors that you meet to check that you are aligned, because otherwise it's going to be really annoying when owners of the business are pushing in different directions and you're not aligned.
Yeah, it's really about managing expectations. And I think what I hear there as well, so it's knowing what they want, but it's also knowing what is it that you want. So you need a clear business plan, or at least a clear direction, that when they ask, well, what is it that how do you see your company growing, that you're not standing there like, I don't know, actually. I mean, I know for some startups that can be challenging as well. It's what is your business plan? So I think that's fundamental in there as well.
But I think it's scary for some, like especially I think less so in the US, but in Europe. I mean, we are both in Europe, so let's talk about Europe. That in Europe, founders, maybe especially women, I don't know, are a bit afraid of like thinking really long term and like, yeah, this is going to be a unicorn. We're going to be a huge business. And many founders are like, yeah, we would love to, but let's not talk about that, because that just make it sound like it's delusional. But I mean, you need to have a plan. You need to have a vision or an ambition at least, because who you take as an investor today, who you take as a co-founder is supposed to decide. Is supposed to be decided by the vision that you have, because you need to be aligned. Otherwise, it's going to be problems in the future.
Yeah, absolutely. So say you convince this business angel and you have your first fund. And you can start with developing your first proto or your first proof of concept, or maybe already your first product. Then at a certain moment, I can imagine you want to grow further. Then what?
Yeah, so at some point, you might run out of runway as well. You might run out of cash, in other words, and you need to raise more money. So how it works is that you have multiple rounds, and they have different names. So that first round that you raise, it's called an angel round or a pre-seed round. So I usually call it a pre-seed round from 100K euros up to 1 million.
Okay.
And then you give away 10 to 20% of your business to those investors, max, preferably around 10%. And then you need to start performing, like you need to start proving things, and there are benchmarks that you need to reach. So especially for software businesses and SaaS businesses, there are a lot of benchmarks that exist. But typically what happens is that it takes 1 to 2 years for you to reach the next step on the fundraising journey, where you need to raise your next round, where you want to raise your seed round. So that means that you're raising between 1 to 3 million euros. So with the pre-seed, you have a lot of angels, you have some small like micro VCs. You also have family offices that are basically like business angels, but the whole family invest together, or they manage their money together. So they invest in pre-seed, but in seed stage, it changes, and you have like business angels. They can't put that big tickets, like 1 million or so. So you have venture capital funds. So especially these seed VC funds. That exist, lots of them in Europe, many of them in Europe, and some of them have different focus areas, or they're focused on geographic areas, or focused on certain markets. But that is the next step. But typically at that step, you need to have like some proof with customers. If you're a SaaS business, you're running a SaaS business, when you're charging a subscription monthly, you want to have 10K in monthly recurring revenue, MRR. That's like the benchmark to be interesting for these seed investors, so that you can go on and raise your seed round. And then you keep on going like that on your VC journey. So you need to raise every year, every second year. So you have the seed round, and then you have the A round that is 5 million or more, 5 to 10 typically. And then you have the B round that is typically 10 and more. And then you have the C and the D and the E and the F. And then you're like a Spotify or something if you
then you're like really big. Then you're really the new Uber.
Yeah. Exactly. But it's important to know that if you're going after the VC money, if you're going after funds, VC funds, they want to invest in a startup that are going to do that journey. If you want to like, okay, but let's take in some money, but I just want to build a 50 million euro business that I enjoy and I own, and that like is mine, and then you should not raise money from VCs.
Because they're really interested in that long-term vision. How big are you going to get? And if you say, well, I just want to keep it small so I can, have a business for a living and it's my thing, then they'll be less interested because the return on investment will probably then be very low, right?
Yeah, exactly. It doesn't, because with their economical model, how a fund works, that means that they need to have a few investments that do 100x or 1000x. So that's why they need to invest in like super risky deals, super risky startups, but that can be super, super big. So I think that's really important. Like, don't waste your time going after VCs if you're not certain that you want to build that. But if you want to build that, there's plenty of capital available. And then you have also the middle road where you can actually raise money from angels. So you have some angels that work with VCs that look for those kinds of deals, but you also have plenty of angels who just love investing in companies that can, give them a good return every year. They can get paid a little bit every year. They might not even need like an exit in a certain number of years, as you do with the venture capital fund. So in any way, you can always raise money from some pre-seed or some angel money in the beginning.
Okay, so there are always possibilities. Now, in the beginning of the show, you also talked about there are best practices when going into seed round, because I can imagine where pre-seeds and angels are more fluid or more about the click. I can imagine that going into the VC territory, that's more about talk business and have a good plan, and it's more formal and structured, if I can say it that way. So what if you're a startup and you're just starting your first seed round, what do you need to take into account to be that 1 out of 100?
Yeah, so I think the first thing that a lot of startups underestimate is the time it takes to raise funding, and that VC funds, since they are so picky, since they have so much to choose from as well, they take their time, and also they want to take their time because they want to invest in founders that they really trust. So if you have like a big exit from before and you're that kind of a founder, then it's going to be easy and like everyone will just want to throw money on you because this is a secure deal, But if you're not that type of founder, well, it's true. It's like that's like what I've heard from these founders. Yeah, that's what it feels like. But if you're not like that, like the most, then first of all, it means that you need to take the time to do fundraising. Like you need to have the CEO of the company or one person in the founding team needs to take like between 50% and 100% of their time for 6 months or a year.
6 months of a year. Oh, yeah.
Because you need to, on average, this is data from DocSend. They have data on this. So on average for a seed round, you need to contact 77 seed investors, and and then that typically means that you do 40 meetings. Okay. So you need to meet with 40 seed investors. And then half of those want to follow up. So it means that you're suddenly sitting in 60. You have 60 meetings, and that's just to begin with. Then you haven't even closed. That just means you have a lot of open discussions. So you need to be sure about that. And also, what is really important is to best is to do an intro call like 6 or 12 months before you're actually raising. So you can get their feedback like, hi, we're doing this kind of a startup. We're doing a SaaS or a marketplace. Do you find this interesting? What's your feedback? Which numbers do you think we should reach to make it interesting for you to invest? So it's important to take that time, talk with them, and start to create this relationship because they're looking for founders that they can trust.
So in the beginning, it's more explorative of nature than really getting that funding. It's more, hey, we are this is our goal. What is your feedback? What would you like to see?
Yeah, exactly. Because they want to have a relationship with you. I mean, the partner that invests from the VC fund will probably sit on your board. So you're going to be colleagues basically. So that's why they want to get to know you in advance. And also they want to be impressed by your quick, your fast development, that you're growing really fast is really important. So also like that's the best practice for a seed round is that you need to grow at least 10% per month on average. So that means you need to do like 3x or so year over year, at least. Like that is just so they want to talk to you and like even take you seriously.
That's just your foot in the door.
Exactly, yes. And then on top of that, you need to be able to paint a very, this vision that we were talking about, like how are you going to be the next Uber or whatever? How are you going to create an industry or disrupt an industry? If you don't want to do any of those two things, like creating a category, disrupting a category, don't talk to them. That's what they want to hear. So tell them that story, basically.
Okay, that sounds good. So it's about taking your time. It's about knowing your VC. Typically, I say knowing your customer, but knowing your VC. What is it that they want to see? And what is your vision? How big do you want to grow? And does it fit with the VC itself?
Yeah, exactly. Okay. You got it.
Okay, so just somewhere in your explanation, you said, hey, there's a lot of information available about this on this website, and I completely missed it. Can you repeat that website? I think it was
DocSend. Yes, sorry. DocSend, so DocSend.
DocSend.
So it's a website where you can like upload your deck. And
so it's like this.
Yes, exactly. That's the one. So you can upload your deck there, and then you share your DocSend link to investors. So the thing is that DocSend knows they have data on all the founders that have used their platform. How many investors did they send it to? How many investors did they meet? How much money did they manage to raise in the end? And they have data on like thousands of seed rounds, and that's what they base this data on. So they have also data on pre-seed rounds and how many angels do you need to meet to raise a pre-seed round. They have that number as well on that website.
That is so good to know. I can imagine, especially when you're just starting. I don't know, me as so I've never raised funds, but I can imagine if I'm already speaking with 25 companies, it's like, oh wow, it's already 25, and then hearing you talk is like, no, 77 on average, and that's on average, so it can be higher and it can be lower. So then you know what's normal and how much time do you need to send in that. So I think that's a good resource. I'll definitely check it out next time I'm going to raise some funds. So let's talk about accelerators, because we haven't talked about that yet. We've talked about pre-seeds and seeds. How do accelerators fit in this story?
Yeah, so accelerators, it depends a lot. I mean, you have many different kinds of accelerators, but what they do is that they can help you get to the next step. So, I mean, when you're a founder and it feels like, you know what you're doing and you have everything, laid out in front of you, but the thing is that you don't know what you don't know.
Exactly.
Yes, so that's why an accelerator can be really useful. So most accelerators, they help you get your first product up and running, or you get your first customer, helping you to get to like product market fit in the very early days. So they usually come in before angels even. Some of them invest, so usually they invest 30, 40, 50K. You have some bigger accelerators that invest like 100K or 150K, but those are not so common in Europe. You also have plenty of accelerators that don't invest anything in Europe. And not all of them have access to angel investors. You also have some of them that are financed by bigger companies, by corporations, and they basically want to get in touch with you and like learn from you, and they typically help you with the network as well. So accelerators can help with many different things, but it's a great support to have like some extra help in the early days when it's just you founders. You can't go out and like hire lots of people. So in this, with an accelerator, you can get help and find out like what is the best way to take care. You can get good advice and get the right network to go to the next step.
Okay, so accelerators don't per se help with in terms of funding. They can, but it's not our primary goal. It's really about helping you on your way with finding your way. Who should you network with? How do you get clarity? How do you build your product? Really getting you started on that way.
Yeah, I mean, it depends a lot on the accelerator. I mean, for example, Fast Track Malmö, we are focused on the fundraising and on the seed round particularly. Okay. So like make sure that you, before going to an accelerator, like try to find out what's in it for you, like why do you want to do this, and what is your goal for the companies that come into the accelerator. Because some of them sometimes I hear the feedback that this accelerator was a bit of a waste of time, and it's not actually that easy to run an accelerator. So I don't blame anyone. It's a lot of work and it's really hard, but many of them are super duper helpful.
Okay. So again, there it's really about having the right click with the right accelerator and knowing how they line up with your plan as well. For VCs, you said typically 1 in 100 gets a yes in the end. Yeah. How is that with accelerators? How easy is it to get in there?
Oh, that's usually much easier. So it depends on the accelerator, but some of them, so you have some that are like more quantity, and for those, it's like a 1 chance out of 2 that you get in, and they have usually what accelerators do that I think is really, really good is that they have very clear, like, okay, we want the founders to be working full time. We want you to have an MVP out, for example. And as soon as you tick those boxes, you're in. So it's not so much about like, but I don't feel this, it's more about like just ticking the boxes and then you're in. And then you also have some accelerators that are much more harder to get into, because they have a longer list, or because they typically, if they're investing, they are much more diligent on like looking at everything and making sure like it's all right. And so usually it's more about ticking boxes, but it's also like me and my colleague Nino at Fast Track Malmö. We're going to work with these people super intensely for 3 months. So we want to make sure that the founders are coachable, that they want to learn, that they're open for advice and open for like discussing things, so that the relationship can be the best possible.
Okay, so as you said, let's talk a bit more about Fast Track Malmö, because they're an accelerator, but it feels like a co-founder almost, right?
Yeah, so we try to make it like that, and that's what we hear as well from some of the founders who've been there.
Okay, so say you are a startup, or one of our viewers are startups, and they're then they think to themselves, well, this is interesting. First, let's start with one question. Do you need to, so Fast Track Malmö is in Sweden, right?
Yes.
Do you need to be located in Sweden?
No, so that's what I love about Fast Track Malmö. I have a European soul. I am from Sweden, but I live in Paris. So that's how I align with Fast Track Malmö, is that we accept founders and startup teams from all over Europe. We need to have the half of the batch in Sweden and the other half in Europe. So yeah, we're looking for teams from all over Europe.
Okay, wow. So everyone in all startups in Europe can apply. How does the program look like?
So it's a 3-month program, and we start before the program starts. We have made a decision to take you into the program and to invest. So we are very we only invest a few percentages of those that apply, but we try to make the application process so it just takes 10 minutes. And you can get the result, initial result, because we don't want to take anyone's time. We don't want to waste anyone's time. We know that founders are really busy and they have better things to do than writing application forms, Anyway, and so we decide before it starts, okay, we'll invest and you're welcome. So we've invested 50K right in the beginning of the program, and then the first couple of weeks. We spend a lot of intense time on preparing your fundraising materials. So of course your pitch and your pitch deck, but also we're looking at the data room and the financial forecast and financial planning, make sure everything is great. And then after that, the normal program, the real program starts, where we every week invite some top European venture capital funds to come and meet the founders for these first intro calls. So we line them up for the founders, so they don't need to sit on the phone or email people and email investors to get to this 77. So we help you get the 25.
That's already 33% right there.
Exactly. Yeah. So we line that up for you. And so it's the best VCs in Europe. So we have Atomico, we have Axel, North Zone, Creandum, Project A, Speed Invest, Cherry Ventures, a lot of impressive VCs come to join and meet the teams in the batch. So we do that, and then every Wednesday we have something called Workshop Wednesday, where we do workshops on different areas to help the founders get the skills that they need to keep on building and growing their business. So your startup can never grow bigger than what you can grow yourself as a person.
I love that saying. I haven't heard it yet, but I love that. Okay, wow. So you have a whole program lined up with Workshop Wednesdays. You have the connections with a lot of big VCs in Europe itself. At the end of the program, what can startups expect, or what is expected from the startups themselves? But where are they then?
Yeah. So at the end of the program, hopefully they've experienced great growth during the program, and we do a demo day by the end of the program, so in May or June. And typically we do it live in Malmö, and we invite investors from all over Europe. Well, this hasn't been possible for the past 2 years, which is super annoying, but but what we've done instead is to do a website where we have all the pitches of the startups, and we invite investors to go and look there and to directly book a meeting with the founders. So that has been super successful, and we've been able to get in touch with thousands of investors to come and check out the startups. And then our goal, and what we hope that the teams will do, is to go out and raise a VC round 6 or 12 months after the program. And then we continue, of course, to support. I mean, we're always on Slack, especially during the program, but also after the program. People write to us on a Saturday afternoon, on Slack, "Hey, the investor is saying this or that. What does it mean? What should I do? Is this email okay to send to this investor?" And it's great. We're always there to yes, do this, or no, do this, or change it like this. So that's how we are almost like co-founders.
That sounds amazing. If people want to sign up, if they want to know more about Fast Track Malmö and sign up, where can they go?
Yeah, so I totally think you should check out fasttrackmalmo.com. Yes, there you go. That's
Yeah.
the so right now applications are not open for the program because it starts in March. So we'll open applications, I think, in August. And we'll be doing interviews throughout the fall. And but we also do a new thing this year, and that's a boot camp. So we're running a boot camp that is focused on underrepresented founders. So this we haven't even had time to talk about during this half an hour, but
No, it went so well. Okay, give it a quick pitch. Give it a quick pitch because it sounds so interesting.
Yes, no, but it's like throughout history, capital has been invested into founders coming from like the same background, the same networks, and however, entrepreneurship can come from anywhere, and great ideas and great company builders can have any color or shape or so that's why we want to do a boot camp for those who want to build a really ambitious startup but are maybe outside of those networks that exist today that are so important to be inside of if you want to raise funding.
So that's why it's the underrepresented founder.
Exactly. So we open up our network and with VCs, and we open up our for our knowledge as well. We're going to do workshops similar to what we do in the program, but it's usually only reserved, to the founders we have in the program. And so we focus on female founders, LGBTQ, refugees, people of color, founders with disabilities, everyone who feel that they are not represented among startups that raise capital.
Wow, that's amazing. So, and that bootcamp, you have to apply for it, or it's open to everyone, or you can just sign up? Is there an application?
Yeah, so we have made it. We want to make this just radically available. So we just demand that that you are an underrepresented founder, but you also have an MVP or some users or some signs of that you actually have a startup. And that you have a scalable business model, that you're a tech startup, that you're building some kind of website or app or platform, digital platform, or hardware, and then you just go and sign up.
That sounds amazing. And that's also at fasttrackmalmo.com.
Yeah, so go to fasttrackmalmo.com/post/bootcamp.
Wait, let me see if I can add that real quick.
Okay.
Bootcamp. Now you hear that I have a heavy typing keypad. Okay, so then you get it like this.
Yeah, exactly. That's the one. Yeah, that's where you go and sign up. So we're going to do that in the middle. It's going to be one intensive week in the middle of September.
Okay, sounds good. So if you're an underrepresented founder and you have an MVP, then definitely check that out.
Yes.
Okay. Well, Melinda, thank you so much for being here on the show today.
Yeah, thank you.
It went by so fast. It's like, wow, we spoke about angel investors, we spoke about pre-seed, about seeding, about accelerators. We spoke about the special bootcamp. That's so much to talk about.
Yes, it was so great to be here.
Yeah, well, I really enjoyed hosting you, and I'm sure that the viewers did so too. So thank you so much for that.
Thanks a lot, Saskia. This was great.
Yeah. And to the viewers, as said, if you want to learn more about Melinda and how to get your startup in the Accelerator program, go to fasttrackmalmo.com and apply for the Fast Track Malmö in the fall, so starting August. And definitely check out the bootcamp if you're an underrepresented founder and you have an MVP. And if you like this kind of content, then make sure to like and share your thoughts in the comments. And if you haven't done so, make sure to subscribe to the Entrepreneur Suite. And if you want to know more about the show, me, or the Entrepreneur Suite, go to theentrepreneursuite.com. Thank you all for watching today, and I hope to see you again in the next video. Bye, guys.
Bye-bye.